InFi, episode 18.
Welcome to InFi, the future of finance, hosted by American economist and author Dr. Robert Murphy. Each week, tune in for dynamic discussions with business pioneers about emerging trends in finance, life insurance, asset management, technology, and more. Now, let's talk the future of finance.
Hey everybody, welcome back to the InFi podcast. Today, we have a double treat for you. We have not one, but two guests who are going to be joining me in the conversation. First, we have Mitch DiRaimondo, who is the CEO and founder of SteelWave Digital. And then we also have Dwinell, who is the managing director of SteelWave. Now you might say, Bob, what are you just getting sloppy or lazy? I thought the company was named SteelWave Digital. There's two separate entities here, and that's what I want to explain on the front end, just so you're not confused going into this interview. So looking at their own website here, SteelWave is a privately held, full-service creative life science, a creative office, and industrial real estate management firm. Now, SteelWave Digital serves as our subsidiary focused on the digitization and innovation of SteelWave real estate and capital market activities. This venture does not replace traditional deal structures, but offers a new universe of deal capitalization, adding to and complementing our existing capabilities. All right, so this will be clear when I let the gentlemen introduce themselves in the actual interview, but I just wanted to give you that heads up on the front end so you're not confused. Where these guys came onto our radar, the CEO of Infineo, Cole Snell, last fall was in New York City at the Benzinga Future of Digital Assets conference. And Cole chaired a panel discussion on, I think they called it Tokenomics in Action. And one of the participants in that discussion was Mitchell. He was obviously there in his capacity as the founder and CEO of SteelWave Digital, where they're digitizing real estate. Okay, so that's how we all got to know each other. With all of these interviews, folks, I'll just say it again, we're not offering discussion with companies that you should go invest in them or anything. They were at rendering financial advice. Just want to foster discussion with people who are on the cutting edge in various fields that are of direct relevance to what we're doing here at Infineo and what we think you, the consumers of the InFi podcast, might be interested in. One last clarification I will give, just because, again, there's a lot of confusion in this realm. Even though we're going to be speaking a bit about crypto in this interview, the tokenization of real-world assets is not crypto, right? So they both rely on blockchain technology, and we'll talk a little bit about that in the discussion. But again, I just want to not confuse people who are new to these terms, that even though a lot of people who have a background in crypto then understand how blockchain technology works and wants to apply it, might then be interested in tokenizing real-world assets, taking things like real estate or, in Infineo's case, life insurance, and putting it on the blockchain. Again, it uses some of the same technology as cryptocurrencies use, but those are different types of things altogether. Okay, so without further ado, here is my discussion with Mitchell and Aaron. Gentlemen, welcome to the InFi podcast.
Thank you for having us.
So I know the backstory here is that there was a pre-existing company and then a newer company, and you sort of are joining forces. So in whatever order you guys think, maybe, Mitch, do you want to start and just explain some of your background and how, what your father had done, but then how you are coming to the table?
Yeah, absolutely. So I graduated college in 2020. When I was in school, we basically founded a cryptocurrency hedge fund that traded the volatility in the market. We were super quick, mitigated risk bets that we were doing, 1,000 a month, right? A bunch of spit plays. But in doing that, we kind of saw the market need for an institutional grade asset, right? One that a traditional finance player could run a due diligence package on. And candidly, we kind of came to the conclusion that hard assets were really the forward edge of that. So I stepped back and I went to my father, who's the founder and CEO of SteelWave. And Aaron can get into what SteelWave does in a second here. But I came to him and I'm like, look, you have a pipeline of really cool next generation real estate assets that would resonate with this space. And I think if we could figure out how to take advantage of that, you could have access to capital that you previously never thought you'd be able to obtain. So that's really what we set out to do. We've been doing it for about 18 months now. We just got our fund officially off the ground, so we're pretty excited about that. But we really are kind of on the forward edge of this, right? The way I pitch it to people is the whole fractionalization of ownership really came to the scene in 2017 with Ethereum. And we're really starting to build the foundational blocks of that space. But the only way to do that is with really good product, really good investment opportunity. And that's where I kind of partner with SteelWave going, look, you guys have it. I think we can really leverage off of it and make a really interesting next generation financial vehicle.
Yeah, and so I'm Aaron Dwinell. I work here with SteelWave as managing director of acquisitions and asset management. I've been with the company here almost 20 years. And SteelWave is a West Coast-based commercial real estate operating platform. So we invest and develop or transform commercial real estate into modern work environments that house the technology workforce. Our specialties are in office, life science, and light industrial, and we're focused in the major tech markets amongst the West Coast. In California, I sit here in Seattle, as well as Denver and Austin. And so we design and develop today's modern work environments. And I think with the fallout from the pandemic and what office means to companies as well as employees today is something that we're on the forefront of and developing these environments for today's workforce. As Mitch has said, we've been doing this for the last 50 years. Our senior team experience working together is unparalleled in the marketplace. Our top 20 professionals have been working together for nearly 20 years. So this is something that we've kind of grown in and experienced changes in the real estate environment. And we have boots on the ground here on the West Coast. And so when Mitch came to us saying, look, I see an opportunity here to bring hard assets into the digital ecosystem, we thought there'd be a natural connection with SteelWave as an on-ramp to bringing in those institutional quality real estate assets into the space.
Okay, great. Just so I understand, so hold on for a second with the digital finance aspect, but just your guys' traditional model, as of 10 years ago or something, were you at SteelWave, a project would come along that you'd realize if we could just line up funding for this and you would go out and get some investors and then it would either start cash flow or they would sell it?
That's correct. So I sit here in Seattle and my partners are in various parts of the West Coast, down in the Bay Area, LA, San Diego, as well as Denver. And so we're indigenous into our markets and finding opportunities to invest or develop real estate. And so we procure those opportunities and then capitalize them. Typically, we've invested on some of the largest, institutional companies here in the US as joint venture partners. That's typically how we've capitalized our opportunities.
Okay, great. And so then, Mitch, what you are bringing to the operation is say, look, there's a lot of potential investors out there that would be very interested if we could find a way for those funds to come in via the digital technologies.
Yeah, I mean, the way I look at it is there's two sects of new investors. There are investors that are outside of the United States that have made money. And I'll use the Middle East, for example, because that's really where we're focused right now, right? The amount of wealth generation that's happened out there is pretty astronomical. And what they really want are US dollars. Well, for us, we step back and we go, why don't we give them a US dollar denominated investment vehicle that'll pay them in dollars for the next 30 years, right? For them, they love that. So that's one side. We call that distressed capital that's really coming in here. And then the other side was the whole crypto market, right? You have an insane amount of wealth that's been generated over the last 10 years. A lot of it is this wealth into individuals who have no experience in money management, were buying pizza with Bitcoin in 2010, and all of a sudden it's worth $200 million, right? So it was really giving them the opportunity to step into this private real estate investment and getting it as frictionless as possible, which is where the whole concept of digitization of ownership came in. What we're doing now is we're doing kind of a mix. You said we mostly do joint ventures. SteelWave, they've been around long enough where they've pretty much raised capital in every way you can, right? They used to do funds, then they went into joint ventures. Now we're kind of stepping back into the fund market with this Bermuda entity we just launched. So, Aaron, you can probably speak on how we've traditionally done it, but at least on this new Bermuda entity, we've kept the traditional rails in all the investment vehicle, right? It's traditional LP interest, but all we're doing is offering to the investor the option to digitize. So it kind of takes it to the next level. It's like, look, giving you this real estate investment, private vehicle, but at the same time, you can also get liquidity into the secondary market if you want it. And that's really what we're starting to see traction with.
Okay, so is this part of what you just said to make sure I'm getting the story? So one of the potential investors that you're courting is, stereotypical, some guy early adopter of Bitcoin, boom, it took off. He, has a huge capital gain he's sitting on, and he wants to diversify. Wow, because Bitcoin per se is pretty volatile. I want to lock in some of it, but he likes being in digital assets. So maybe he gets into some USDC, he does some, gets to some Ethereum, Bitcoin Cash, and But you're saying if he wanted to have exposure to something like real estate as an asset class, he might want to do that, but he doesn't want to cash out, turn it back into dollars, put it in a conventional bank account, go through it. And so you're offering him a much easier way that he can just diversify right now what he might be thinking of as his crypto portfolio into something that's actually not crypto, but it's still a digital asset.
Yeah, in theory, that's what we want to get to. Mm-hmm. The market isn't quite there yet, right? The rails aren't there yet. The tech's not quite there yet. But I do think it will be eventually. When you look at just the efficiency that this whole technology brings to the capital markets area, it's kind of like the first innovation that's really going to rock the boat in a long time. And for us, we just want to be on the forward edge of it, right? We're like, hey, we've been doing this for 40 years. We've seen market cycles. We're definitely in a market cycle right now, which, is a whole other thing. So this is some of the best real estate buying opportunity we've seen in 40 years. So it's kind of like a perfect storm. Mm-hmm. It's like we got the capital access, we got a great real estate investment opportunity, and we're just putting them together.
Okay, so we're not right now at the point where someone opens up their MetaMask wallet and says, oh, I want to trade this much of Bitcoin into, Southern California real estate. That's obviously not where we are. But can you guys, I'm curious, for both of your perspective, where are we right now for the listener?
Well, I think, Mitch, I can speak to this too. I think we thought that might be the case.
Mm-hmm.
When Mitch came to us and said, hey, there's a whole new world of finance out here that we should look to try to tap into. We went out and reached out to a number of the exchanges at that point in time. And what we found was that, an absolute void institutional quality real estate.
Mm-hmm.
And we thought we had the ability to bring that prototype to the space. And I think what we quickly realized that, the maturity of that space wasn't there from an institutional standpoint. You had retail investors where, a typical deal size for SteelWave could be anywhere from $50 million to $1 billion, for example. And there was no way that we were going to raise those kinds of funds in that ecosystem as it stood. Now, the ecosystem is evolving. It's growing, and we believe that it's going to mature to that point, but not without the infusion of institutional capitals into the space. And so what we did is we stepped back and we looked at it and said, okay, how can we be a first mover to continue to advance the space and benefit from this growth? And from that, we've stepped back and we've raised a traditional fund that is domiciled outside of the US to provide future flexibility to tokenize the LP interest in the future to be traded on an exchange that is to be determined. And so we're raising a traditional fund with the option, the no-cost option for our LPs to convert all or none of their holdings in the future to be traded, at such time that the ecosystem has evolved. And for us, what we see as the opportunity here is we're out in front of the market as we see it evolving. But two, we're trying to bring institutional players into the space to further advance this digital ecosystem. And as Mitch had mentioned, the appetite for this space seems to be greater from an international standpoint than it is here in the US today. And so we've been focusing in the Middle East and Asia on raising LPs for this traditional fund who we see value, this free digital opportunity to convert their holdings into digital securities.
Our original thought was, in order for institutional investors to step into the space, they need institutional grade investment vehicles to do it on, right? And if you look at all the real estate that was coming up, it was like a warehouse in the middle of the country, or like a multifamily deal that's paying 6% in Florida or something, right? There was nothing of scale of real institutional appetite in it. And that's why I was like, look, if we can bridge SteelWave, we could really bridge that product type and almost force the hand of the institutions to come in because they want it. And that's really what we've set out to do. And I think everything that's going on in the market right now is playing directly into that hand, right? You're seeing the bad actors start to get weeded out. You're seeing regulatory frameworks start to be drafted. You're seeing these conversations, even on Bloomberg, right? When I first started this, thought of having crypto or any of those tech conversations on there was so far-fetched. And now it's you turn on the channel, it's every other story, right? So for us, it's kind of the perfect storm to really be at the forward edge of this space. And that's also why SteelWave is great, because it's a privately held, vertically integrated company that the executive team sees this as the future. So they really are open-minded to it and willing to be that ace in the pocket for the crypto space, is kind of the way I like to put it.
Yeah, I know what you mean. You just slowly see things becoming more mainstream, like another, CNBC.com didn't used to have the price of Bitcoin or whatever as at the top tickers, but then within the last few years, they've incorporated, they got the S&P 500 and the Dow, and then they've also got, Bitcoin's price along with gold and whatever. So yeah, that is becoming more mainstream in that respect. So do you guys have any theories? Why would it be that you're finding more interest in the Middle East than you do among right now American investors?
I think it's because they're more open to this market, right? What my theory is, you're going to see this really evolve outside of the US because most of those individuals don't have very easy vehicles to step into US-based investment vehicles, right? For them, if you're sitting in California and you have $1 million, there's a bunch of options that you can go put it into, right? But if you're sitting in, Dubai, Monaco, Cyprus, an area like that, for you to step into a U.S. investment vehicle, specifically a private U.S. investment vehicle, it's going to be pretty difficult, and the minimums are going to be extremely high. So for us, we're look, let's kind of erase both of those.
Do you have any comments on that, Aaron?
No, I think what we're seeing is that from a real estate perspective right now, when you go back to 2023, is the market's been at a complete pause. The institutional capital can't run fast enough away from office today, right? And I think that's also falling true in other asset classes. And so I think you've got a complete void of institutional investment at the particular moment. It's creating an opportunity, I think, for international investors to fill. And I think that there's an unprecedented buying opportunity right now that could be capitalized on. And I'll give you an example. From an office standpoint, what would have traded at a 4 or 5 cap or multiple on income, is now trading at 8s or 9s. I think the value of a lot of these spaces are down anywhere from 30 to 70%, depending on what and where, creating a tremendous buying opportunity for the right real estate. And I think that is something that is resonating too with overseas investors who are looking to capitalize, on the dislocation of values here in the U.S.
I had heard, so I was at a conference. This is a while. This was like last summer at this point, but at that point, a lot of the real estate it was a real estate investment kind of conference, and they were concerned that the commercial sector, like there was relatively high vacancy rates, and that was partly because of COVID, but also like people then telecommuting and not going into the office.
Right.
And then I imagine rising mortgage rates doesn't help things either. So just not that it has to do with the theme of digitization, but just as an aside, because we have a bunch of listeners who may just be real estate investors. Do you guys have any thoughts about just in general the real estate market in the U.S.?
Yeah, well, look, I mean, I can share what our experiences have been, right? From a West Coast perspective in these highly tech concentrated markets, we've seen kind of the perfect storm from the standpoint of the fallout from the pandemic, right? As to, a return to office, and a lot of these tech companies were kind of the last to call employees back, which has created a huge void in vacancies. And I think where they're calling their employees back to has also changed. And I know it's significantly impacted the downtowns, San Francisco, Seattle, LA, are experiencing peak vacancies and low demand right now. And it's had a major disruption to the office space. And at the same time, we saw an unprecedented increase in interest rates that I think combined has really impacted the value of commercial real estate. And office isn't alone, right? I mean, I think office has made a lot of the headlines because of the return to work headwinds. But residential real estate, the industrial space is not immune, to these impacts that have taken place over the last 24 months in the market. I think with that, values are down. And I think that there's an opportunity to place some bets going forward, and what will be in the rearview mirror, probably an unprecedented buying opportunity for those that do make the bets.
Did you want to chime in on that, Mitch? Or?
I completely agree. I mean, across the board, I've been pitching it to people is if you can look through the fog of this current market with rates doing what they're doing, it really is some of the best buyings in the last 40 years. I think a pretty powerful stat is, what was $900 a square foot in San Francisco is now, if it flips, $250 a square foot. But replacement cost on something like that, it's like $500 a square foot, right? So at the end of the day, it's below replacement cost just because no one wants to be here because the city isn't vibrant. The only way to make that happen is if you have groups like ourselves coming in and making it vibrant, right? Like San Francisco needs a Hudson Yards. It needs a Chelsea Market. It needs areas that people want to go to and feel safe going to. And that's expensive to do. But if you're buying the land as cheap as we're looking at, it's very much so achievable. And it's just another cycle, right? The city, all these tech markets that are built up on these companies that hired like crazy, didn't really amenitize their buildings, are now feeling the fire. And those are the deals that will become arguably kind of the next generation of a city's landscape. And that's really what we're trying to deploy, all the capital we're raising right now.
And we've seen a significant shift in the last even 12 months from a return to work standpoint. I sit here in Seattle, and I believe Amazon called their employees back in May, right? And then I think have forcefully pushed that over the last 6 months. And the landscape at the street level has totally changed. You go walk around South Lake Union today, and it feels just like it did in the pre-pandemic. But if you go a few blocks south in other parts of the city, it's completely quiet, right? And so the point being is that I think the return to work trend is underway, but what and where these employees are going back to has changed, right? And I think these companies are trying to understand what their work environments need to be and where they need to be to support their employees. And so we've been seeing a significant flight to quality, whether that be in certain parts of the downtowns or locations, and also, the types of buildings they're moving to. And I think that that's something that we're definitely in the forefront of and focused on at SteelWave, as we make these future investments and developments.
Can you guys speak? So I know you know this, Mitch, because you were on a panel with our founder, Cole Snell, but Aaron, in case it's not on your radar. So what we do here at Infineo, among other things, is we're taking life and permanent life insurance policies and putting them on the blockchain and try to open. So it's sort of analogous to what you're talking about, because we know there's a lot of worldwide demand for a certain policy design that it makes it excellent as a cash management vehicle that you really can't get outside North America. And so anyway, that's partly what we're doing. So a lot of what you guys are saying is, very similar to what we've been doing at our respective lane. And I just know, and going to these meetings and meeting different groups and whatnot to in this ecosystem, I've even noticed just even in the last 12 months that the level of going from, oh yeah, this is science fiction to, oh, this is clearly going to happen, and maybe we want to be on the cutting edge of in various groups, how even like household name financial institutions all have teams that are looking at, do we want to put some of our stuff on the blockchain and whatnot? So this is definitely becoming more mainstream, and I'm gathering, is that your experience too, that just people are getting more comfortable with this?
Absolutely.
Yeah, I think, it's kind of the traditional tech syndrome, right? Where like new technology that has come to the forefront has wildly underperformed in the short term, but then wildly outperformed in the long term. Mm-hmm. And I think with blockchain and some of the cryptocurrencies coming into mainstream, it's still a relatively new phenomenon, right? And I think we're still kind of in the early innings of that space as it's evolving. I think you've nailed it, where you're starting to see more notoriety, more news around this space as it's evolving and gradually being accepted, amongst the retail and institutional users.
Absolutely. I mean, I see it. Personal story, I pitched the head of my business school, my hedge fund, in 2018 as my thesis. I was like, yeah, we already got it running. I got the algos going. And he gave me an F. He was like, it's a non-investable asset class. And then fast forward to January 2020, I was getting calls to fund their engineering school in blockchain. And I'm like, oh, the tides have changed, huh? But you see it across the board. We definitely see it. Being in the real estate space from the crypto space is kind of like day and night. I probably bring the average age of this office down by a good 15 years. So talking about this stuff originally, it was like literally teaching calculus with a crayon. But now everyone's starting to understand it. They're reading the news. It's an everyday. You open up Yahoo Finance, you open up Bloomberg. There's something out there about it. Mm-hmm. And I just think, as Aaron said, it really will underperform in the short term and greatly outperform in the long term. And we've seen it in pretty much every cycle that we've been in. And we're excited to be on the forefront of it. I know Cole and I chatted after the panel, and what you guys are doing is extremely interesting. And I think a perfect thesis for the space. And I think there's a bunch of areas that people aren't really thinking about right now that will also become perfect theses for the space. But in order for that to happen, there needs to be good product for institutions to deploy money so that the space grows, the rails develop, and then it's a snowball effect. But yeah, it's cool to watch Bloomberg and see the price action every day. That's for sure.
Yeah, I don't know if it's a good analogy, but I've thought there's a problem like with electric vehicles, whether, I don't drive an electric vehicle, but there's an issue of before there can be widespread adoption, you need to have a bunch of charging stations, but it's not profitable to build a bunch of charging stations until a lot of people are driving. So there's sort of a chicken and egg issue. And we've noticed that at our end too, that we want to make a marketplace to bring buyers and sellers of these things together. But if you only have it set up for one side without the other side being there waiting in the wings, then, so again, you kind of need the supply and demand to come in simultaneously. And I guess they'll probably ramp up in fits and starts.
I think that's perfectly said, honestly. Like the whole EV thing in California versus Texas versus, Louisiana are totally different things. I think you're starting to see that in the financial markets with access to information. The people that are reading Twitter, the people that are on the forefront of the information feed are the ones that are paying attention to it. And candidly, I think that's really happening outside of the US. I think the US is pretty much doing everything they can to block innovation in the space. And you're starting to see it.
I want to come back to that. That's going to be one of the final questions that I'll have for you guys in terms of if you want to be thinking regulation and, the future, that kind of thing. But I'm curious, Mitch, you're certainly equipped, and obviously, Aaron, if you have thoughts too, but the pushback I get, so if I'm talking on social media about what we're doing at Infineo, or just even more generally, if I make some remark about hey, it's going to be great when we can have, smart contracts, doing dispute resolution or whatever, down the road, like people, if they have an argument, they can just go and if I say the word blockchain, I will get a bunch of Bitcoin maximalists biting my head off saying, no, the only thing blockchain is good for the rest of time is to trade Satoshis. End of story.
Yeah.
Anything else that's a use case is just some buzzword that someone's trying to get money off you because you could do it with the database. SQL way outperforms blockchain and anything except Bitcoin. So presumably you don't agree with that, Mitch. So do you want to speak to that?
I think at the end of the day, we're still in the first two innings of this space. But for someone not to see the power of the whole fractionalization of ownership, and then the algorithmic smart contracts is a whole nother layer to it, right? So all of a sudden, as opposed to paying a bunch of middlemen that I'm going to have to pay to make sure I don't have investor one squawking at investor two or taking money from investor three, I can just run it through an algo and it makes life way easier. So I see that. But the other pushback I get, and this is really from the traditional side, is when we start talking about tokenization, right? Because usually when we go raise a fund, $500 million fund, 5 investors, $100 million piece, right? The LPs know each other. They know that, if we're doing something, people are going to vote, make it a decision. But then what happens when you fractionalize that into smaller pieces, right? And LPs start to get a little bit shaky going, I don't know who my other LPs are, like voting rights and all that stuff. So I've seen that and the direct pushback. And then the regulatory side, I'd say, is the other thing. People are like, well, why are we going to put risk layers on something that we don't know is going to come to fruition in the future? The U.S. could block it or have a traditional finance group come through and buy it up. And honestly, I think the ball is too far down the hill for that to happen, right? The cat's out of the cage. People understand that this really is a globalized financial market. And to have it sectioned out by countries and jurisdictions and everything else, it's an archaic way to look at it. It's the same way of information dissemination, right? When what is controlled of what you read and understand will determine your opinions. And I think it's the same thing with financial markets. It's what you have access to information-wise will determine on your investment decisions. And I think that's really where we are. Aaron, what do you think about that?
No, I think that's spot on. I mean, and I think from a real estate perspective, what's attractive on this digital ecosystem space is providing, true liquidity and what really is an illiquid asset class. And I think as this space advances to provide, whether it be primary raises or a secondary market, to create these holdings and these institutional assets as a truly liquid class, is the future that we see. And, we believe in this fractional ownership and frictionless, asset transfer as the future for real estate.
Okay. And again, just for the benefit of people at home who might not fully get, you have in mind that, okay, so yeah, right now it would be difficult using traditional methods for someone to just put $100 into San Francisco real estate. Like that would be, you couldn't just go online and go do that. And so what in the long run, the goal is that yes, you will have different tokens that people can purchase and that would represent, there's a pool of real world, real estate property. And then you guys have issued tokens, each of which is, 1 divided by N.
Right.
That's exactly right.
To that. And then people can trade those tokens.
It's basically, in its simplest form, and I know it's not directly it, but for people to understand it, it's the next generation of a private REIT that's accessible to anyone with no minimums and instant liquidity. And that's really what we're trying to shape here. Now, I don't think that that'll be into fruition for the next 12 to 18 months, because I think the institutional players need to come into it first and then have their positions in the secondary market to provide that liquidity. But I think it is happening. And I think people are starting to think like this, and especially international players, big boy international capital allocators are not only looking at tokenization, but they're starting to tokenize their own assets. So basically they hold it and they don't sell it until the time is right. And there's a bunch of that going on behind the scenes right now.
Can you just elaborate on that? So you're just saying they're not wanting to sell it, but they're getting the step out of the way is to make a digital representative of their property so that they can easily trade that to somebody if they so choose?
Yeah, at some point down the future kind of mindset, right? So let's say I have 1,000 acres in the United Kingdom. I own it, I operate it, I have full control of it. So I go to a group and I go, okay, let's tokenize this into 1,000 shares, right? With the mindset of when this market develops, I'll be able to take those shares and bring it to an exchange. And you're starting to see more and more of that. And that's, in my opinion, that's kind of a leading indicator of they see it as coming and they want to be forward on it before other people are jumping into it.
Okay, I'm curious if you guys can give your thoughts on just timelines of various. And again, we're not going to hold you to this, so you don't have a crystal ball, but just to give the listener who's intrigued by this a sense of, you guys are in the trenches on this and you're seeing how it's developing. Like, what do you see as, by this date, we'll probably see such and such hurdles that might interrupt your predictions and whatnot?
Well, I think this Bitcoin ETF is going to be a big stepping stone for the entire space. I think that's kind of starting at the races here. And now all of a sudden people are realizing, all right, well, I got a spot position I can actually step into. Now, I think for our side, Aaron, you probably speak on this, but we just got the fund confirmed. We'll probably have it raised within a couple months and then be deploying by end of Q1, beginning of Q2 of this year. Probably like a 12-month deployment phase, at which point, once it's fully deployed, we'll give our investors the option to then digitize. So 12, 14 months, I'd say we'd have something on an exchange. But at the same time, when I say an exchange, right, this whole tokenization realm, there is no Coinbase or a Binance, right?
Mm-hmm.
It's all these smaller groups that don't share order books. And it's like you're picking your markets more or less. So I don't really necessarily think that the leading edge exchange has shown their cards yet in this, right? And I think you're going to start to see that over the next 12 months. Who is going to be the actual power player for this whole real world asset push? And I think it's going to be the person that spent all the money to get all the regulatory stuff together. And they started doing it like 24 months ago. So we'll see. I mean, timeline wise, I'd say 12 months from now will be a totally different market than what it currently is. I think the next bull run will be, the backbone of the next bull run will be both hard assets and then tokens that their technology facilitate the bridging of hard assets into this market. So I think that's going to be the next wave. And I think that needs to go before you can start picking your winners and losers. But Aaron, what would you say on that?
No, I think that's right. And I think the horizon for maturity is probably a bit longer from what Mitch was saying. But I think you're going to start to see some name brands showing up in this space and advancing it. I mean, I don't think that there's a large secondary market today to really trade these tokens. But part of it goes back to your comment on the EV car versus the EV station. And so, we're bringing the car here and hoping that the stations are going to start to show. And I think that is the opportunity going forward. And I think as you bring more quality real estate into this space, those secondary markets are going to naturally evolve. And I think we're going to probably see that over the next 36 to 60 months, in my opinion.
Have you, just maybe for the benefit of some of our more technologically savvy listeners, have you guys made any decisions yet, like which blockchain you're going to use things there, or is that all still TBD?
Yeah, I mean, we've been tossing around a bunch. I think there are going to be a bunch of players that are going to come to the scene over this next push. Yeah, I'm a big fan of Solana. I just think they're a good group. I know they went through some troubles with the FTX capital and everything there, but if you want to talk about a good recovery story for 2023, that's the project right there. But yeah, I mean, look, would it maybe just not that you're going to even need to name names, but like, can you give an idea for the listener, like if they have something they might be thinking about, like what criteria do you use to evaluate like potential ones that you might go with? So candidly, I mean, again, I run a volatility trading firm, so we trade everything.
Mm-hmm.
But I pick my real winner because there's a difference in a trade and an investment in my mindset, right? A trade is something you're going to in and out. An investment's like, okay, I see these guys as a power mover. And I just think the team over there, they're really good. They've gone through the winter, they've seen it, and they are on the forward edge. I also think they have the technology and mindset first. And that's a big thing. It's less so the money cap side, more so we actually have a utilizable technology here and we're going to apply it in X, Y, and Z. But I'd say my biggest criteria for that is the team. You're investing in the team because at the end of the day, it's a rocky road up here. We just went through a huge winter. You saw a massive pullout. You've seen talent leave the space. You've seen talent come into the space. And I just think it's a good team, a good project, and they're on the forefront of it. I think there are also a couple other good ones. Exchange-wise, I think like T0, they're really forward edge. They're backed by the NYSE. Great group, great team. And yeah, I mean, the winners and losers here, it's too early to choose. But I tend to go with individuals who I trust, and those two are definitely at the forefront of it.
I guess another question I have for you guys is earlier, maybe it was you, Mitch, you seem to be alluding to the fact that maybe from a regulation standpoint, the U.S. is not on the cutting edge of this by any stretch. Whatever you're comfortable saying, would you mind just for the listeners who aren't up to speed on this, just to give an idea of what are the issues involved and what does that mean, just that they aren't making the necessary regulations so people have some certainty in this space with property rights or outright hostility, or what do you have in mind?
Yeah, I mean, look, I don't want to get too into the weeds here with it because I don't want to piss off the wrong people. But I think at the end of the day, the whole mindset of bridging hard assets to this space will force the hand of the regulator. Because I see the regulator's side now, right? They're like, okay, we can't really run a risk parameter package on this. We don't really know what's going on, where the money is. You can't really account for it and whatever. So I understand that. But at the same time, if we put a real estate deal in front of them and we're going, look, current cash flow, hard asset, backed by the land value, it forces the hand. And I think you're going to start to see a lot more of that. I also think that if the U.S. continually just shoots itself in the foot here, they're going to put themselves so far back compared to everyone else. And it's scary to watch happen. I'm almost watching a Silicon Valley 2.0 happen in everywhere but the U.S. in this space. And it's crazy to watch happen. You're seeing nation states that are more open to this become complete power players. And it's an interesting dynamic. And I think the U.S. is at a rare crossroads here where they can either choose to be a leader in it or choose to be a follower in it. But I do think that this is definitely going to shake up the power dynamic over the next 12 months.
And just to be more specific so people know, like, what would it mean for some other country? And again, you don't even have to be specific, just in general. Like, what does it mean to say they're a leader in this? Just that they're giving the infrastructure so like you can write contracts referring to digital assets, or do you mean something?
Yeah, they have guidelines and rails where an institutional player feels comfortable to actually open up a project, right? It's like, I feel comfortable with the fact that, you guys understand this enough. You're not going to come in and shut me down in operation for something that shouldn't be shut down wise. And a lot of that, it gets into what's considered as security and what's not considered as security, which is why the real estate play was kind of the clearest one to us in lights. We're like, it's a real estate play. It's a real estate REIT, more or less. Can't really get around that. So yeah, I think when you start to see more bulletproof security offerings coming, the regulatory mindset will change over time.
Okay.
And Aaron, what do you think on that?
No, I think that's right. I mean, I think the rules of the game are unclear at the moment. What you can do, what you can't do, what you must do, right? I think is not clear. And I think that set the space back. And again, I think bringing hard assets into this ecosystem will advance those regulations. As Mitch had mentioned, where you've got hard asset backed securities and what the rules of the game are behind those. I think that will help from a regulatory standpoint to advance that space. So I think that's exactly the case as Mitch had laid out.
Yeah, it sounds like some of the challenges you guys are facing, same thing we're doing over here at Infineo, that it's what we're trying to tokenize is like the most boring conservative asset imaginable, life insurance. That's right. Not exotic by any stretch, but yet if people hear blockchain, as they might think, oh, that's FTX or that's Mt. Gox if they have a long memory or something. And no, there's a certain sense in which this has absolutely nothing to do with that, except some of the underlying technology. But right, and as you say too, yeah, we're just erring on the side of let's make sure that we're complying with everything, and it might take longer, but You want to, do it slow but right, as opposed to, getting to market first, but you're gambling on which way is the regulation going to come down.
Exactly.
I do you guys have any closing thoughts about, I guess, the future of real world assets, tokenization? Do you think, 2030 that this is going to be commonplace, or do you still think it's going to be just for the people who are technologically savvy?
Yeah, I think it'll be commonplace, but I also think you're going to start to see your everyday name traditional finance players coming in and becoming a bigger piece of it and integrating this technology behind the scenes of what they already have there. So in a lot of ways, like, the retail investor might actually not know that this tech is being implemented behind the scenes. And I think you're going to start to see a lot more of that, which candidly will just allow for more investment opportunities. But yeah, I mean, Aaron, what are your thoughts on there? Because we were at that conference, we had a bunch of very interesting conversations with people on this question, and it was a mixed bag of answers.
Yeah, look, I think the space is evolving, as we had mentioned, as far as the technology is being adopted and kind of transformed into what its steady state is going to be. I think it's still TBD. I think the technology is there. It's not going away. And it's how we adapt ourselves to utilize it. And I think it's exciting to be at the forefront of this at this particular time, and hopefully helping advance that adoption here by being in the space is what we're hoping for. But I think it's just an exciting time to be in this space, at this particular inning, I guess, if you will, of its adoption.
Yeah, I agree wholeheartedly that we're, building something new here, and it's just, we'll remain to see if the rest of the crowd catches up with what we're doing. But yeah, it certainly is exciting. Well, folks, my guests have been Mitch DiRaimondo and Aaron Dwinell. They were the CEO of SteelWave Digital and managing director at SteelWave proper. Thanks, guys, for your time and your insights.
Thank you so much for having us.
Yeah, I really appreciate the opportunity. Thank you.
Okay, thanks. And thank you, everyone, for tuning in. We'll see you next time.
This concludes another episode of InFi, The Future of Finance, with Dr. Robert Murphy. The information provided is for educational purposes and does not constitute financial advice. Consult with qualified professionals before making any financial or investment decisions. For more information on the host and for previous episodes, visit infi, thefutureoffinance.io. Thanks for listening.